Hello everyone, welcome to the Elliott Wave Learn YouTube channel, and this is George. Today we are going to talk about market structure. Whenever you observe the market, you will notice that it is almost always moving in a specific direction. How do we identify this structure? How do we know which structure or time frame the market is currently respecting? When we study the technicals, the very first thing we must identify is the trend. If we know the true trend, only then can we position ourselves to take accurate and profitable trades. The importance of practice and time frames. To find and identify these trends, practice is absolutely essential. Even if you start with small amounts, regular practice is a must. You can jump into any lower time frame in the live market to practice tracking these structural shifts. This is the natural routine of a disciplined trader. If you want to become a professional, you have to follow this practice. When it comes to mapping out the macro structure, you should always analyze the daily time frame. We don't necessarily execute daily trades directly on this macro frame, but it is the definitive time frame that reveals the true market structure and the broader trend. Elliott Wave structure, impulse, and correction. Generally, when the market moves, it doesn't just shoot straight up in a vertical line. Instead, it moves in a zigzag pattern, pushing to the upside and then pulling back to the downside. If we look at this through the lens of Elliott Wave Theory, the structural movements are broken down into two main types. Impulse move, when the price moves strongly in the direction of the main trend, upside. Correction, when the price pulls back against the main trend, downside. A complete impulse sequence consists of 5 distinct waves. When you combine the action and reaction phases, you can clearly label them as waves 1, 2, 3, 4, and 5. Diving into lower time frames, subwaves. Now, how do we actually execute a trade once the price starts moving? To find high probability entry points, we drill down from the macro view into a lower time frame. Within a single major wave 1 of the larger trend, you will find a smaller internal fractal structure consisting of 5 subwaves, 1, 2, 3, 4, and 5. The golden rule of wave nature. When the market is progressing upward in an impulse trend, it develops as a 5-wave sequence. When it drops into a corrective phase, it moves downward in a 3-wave sequence. Once that 3-wave correction finishes, it resumes its primary trend with another 5-wave microsequence. The fist and finger analogy, think of it like your hand. You have 5 fingers. If you want to fold your fingers into a fist, there have to be individual joints and segments that allow them to bend. If you close your hand completely, it is recognized as a single entity, a fist, representing a single major trend wave. But when you open that fist up, you clearly see 5 individual fingers, representing the 5 subwaves. Similarly, when the price completes a full sequence of waves, 1 through 5, on a higher time frame, it is viewed as just a single higher degree leg. Just like every finger has a distinct name and function, thumb, index, etc., each subwave within the impulse and correction has its own specific personality, rules, and guidelines. Rules and guidelines. To recap the basic structural count, waves 1, 3, and 5 are structural impulses moving with the trend. Waves 2 and 4 are structural corrections moving against the trend. While waves can extend and expand, they never drop below the minimum structural requirements. In upcoming sections, we will dive deeper into the exact rules, invalidation levels, and guidelines for identifying these wave environments perfectly. I hope this introductory breakdown of market structure and Elliott Wave fundamentals helps clarify how the market breathes. Keep studying the charts, practice on lower time frames, and track how these structures unfold in real time.